All right, this is September 2021, Texas Investments Market Update. Just going to take a quick look at the portfolio, see how they're performing, see if there's any noticeable changes or trends going on in the market. I really like this color chart because I think it's pretty easy just to see with colors kind of what's going on. Dark green, of course, are the gains, and the dark red are the losses. And so, of course, we want to see where those reds are turning to greens and greens turning to reds. Currently, we following rather, the down moves portfolio, and you can see that it has been all greens, and more recently, we're seeing lots of reds here. Right now, I think the best performing portfolio for this month might just be the up moves. Let's just run through here and see. I don't see anything coming close to 3%. Oh, there we go. We got alpha and down, and so all of these are the betas kind of mixing in with some return stuff. Seeing a lot of yellow and red kind of for the last really 4 months, just kind of across the board. Looks like this one is a little better. See some bright yellow there. And here's where we really get into the yellows. We really see some brighter colors in here. Again, these are all the beta portfolios, and beta just means that when the market goes down, these stocks go down less, right? Or maybe even are going up in price when the rest of the market is coming down. But what's really interesting is, and I kind of hate it, but these portfolios are not just strictly beta stocks. This is beta, return, and alpha. So it's literally the scores make of 33% beta, 33% return, 33% alpha. So we have really some growth stocks in this one, growth stocks in that one. Growth there, even though it's mixed in with a little bit of down, right, which is kind of defensive. And then again, growth stocks here, but really safe because we're dealing with beta and the standard deviation, which means that the price jumps around a lot less. So that's what's been performing better lately. Let's see if we can see some other bright spots here. All right, so what I'm seeing here is a lot of volatility, right? Because we see some dark red, but then we see some really dark green, right? And so these are all the alpha stocks. And so again, we're talking about growth. So growth there, a mix of both, right? And then same thing, kind of growth and defensive safe plays. Now, up, what that means is that when there's a lot of selling or a lot of buying, when there's a lot of volume, when there's a lot of transactions for these particular companies, the price tends to go up versus down. Okay, so that's what up means. And so what you're dealing with this particular portfolio is you're talking about companies, again, that when there's a lot of buying and selling, the price tends to go up, but the price also doesn't jump around a whole lot, right? So it's up standard deviation. So that's really interesting. So just to my eye, right away, it looks like we're getting more into some growth stuff happening. Maybe there is, I think, we have the recovery going on, and I think right now there's just a lot of back and forth. And so, again, we see just a lot of volatility around here. We have these dark reds and these greens here in September. One portfolio that I always like to look at just to kind of gauge things is the dividend portfolio, because this portfolio is made up simply of companies that have the highest dividends. And so typically when the stock price goes down it automatically increases the dividend. But overall, though, I have to say that these companies are companies that already pay a large dividend anyway. But again, typically, these are also going to be companies that are made up of companies where the price is dropping, so it increases the dividend just by math. And so, another thing about dividend stocks is that when there is some fear in the market, when people think that maybe stocks are going to go down, typically you'll see a lot of money run into companies with large dividends because then they'll be able to make some money on the dividend and not necessarily care about the stock price itself. And we see that for the last couple months, the dividend portfolio has actually done fairly well. I mean, it's not like green or anything, but it's not dark red either. So yeah, I mean, up moves looks really good compared to down moves right now. Let's take a look at these 3-month averages because I think these kind of tell the tale as well. So we're talking about April through July, May through August, and then June through September, just to kind of see what's happening. And we see that the dividend portfolio has performed, it's actually coming down in performance, not performing as well. There we go. Okay. Same thing with these growth stocks. You see they were doing really well, and performance is starting to creep down. Up moves has just done well overall, and then we see the down moves performance is coming down. Standard deviation, stock's not moving around a whole lot. It's performing well. Dividend beta coming down. So most portfolios are coming down. Most. There are some though that have done well and are doing well currently, and so really interested to see what those are and what they're doing. And again, we get around these beta portfolios. The only one that seems to have lost a step are these at the end, which are the safer plays. So it looks like it's kind of a mix. It really is, There's a lot of volatility around the straight up growth portfolios. And it seems that the best performing portfolios right now are those that are kind of a mix of things and not really just one way or the other. Let me go back and take a look. Because now the up moves, it's definitely different than everything else, it appears. So I would say that the up moves right now, up moves and standard deviation are the best performing. And then, like I said, we have some beta stuff. So again, what this means to me is that defense, 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 and the fact that if there is a lot of volatility, if there is a lot of selling, you want to be in something that's not going to move around a whole lot right now. But I think it's also a time to start looking at some growth companies, right? Those high flyers, those companies that's going to return quite a bit of money. There are some that are, a decent price. I think it's worth looking into. Let's also take a look at the overall performance. There we go. All right, so this is a rolling 12 months. Let me go bigger here. All right, yeah, rolling 12 months. We see that the moves is still at the top of the list. Um, just more a long-term trend. Down standard deviation is underneath that, and then alpha and down is underneath that. So again, you see a bunch of these down portfolios that are really at the top of the list for the last 12 months. But I think it is interesting that we do see, again, right underneath that, the standard deviation, and we do see the alpha, which is, like I said, those more growth stocks, those high flyers, those companies that are really where the price is really moving quite a bit. And then if we look even uh, longer term, um, again, we still have primarily down portfolios. So I think the trend is still intact with the more defensive companies performing. But like I said, it does appear that here and there's going to be definitely uh, some growth companies and some high flyers that's going to do really well. One thing I did notice compared to last month is that the volatility has crept up a little bit. I remember looking at last month, so I'm not going to pull it up, but you can go back and look at the other video. The high was only about like maybe 17 or 18, and now it's up to almost 20. And so what that means is that prices, I think, in general, are moving around a bit more than before. All right, let's take a look at some individual names here. In basic materials, and let me come over here first. All right, and basic materials, we see that it's been just a steady drop for the past couple months anyway. And these are going to be, your materials, your metals, things of that nature. And like I said, inflation, and I think the scare around COVID and what that's going to do to demand has really dropped the prices in the basic material sector. We're currently in Southern copper, which, as you can see, is pretty high up on the list as far as 12-month return. EMN is the MVP for the sector. Again, we do not have a buy or sell on Southern Copper, so we're not going to go anywhere anytime soon. Communication services, we know that we're in Rogers Communications. Looks like communications as a sector has jumped around a little bit, hasn't moved too much. AT&T is the sector MVP, but the price performance has been poor. I mean, over the last 3 months, you see it's just drop after drop after drop. Hasn't done anything. Second behind AT&T is TELUS, which is a Canadian communications company. While the average return is decent, we see for the last couple months it's dropped quite a bit. Rogers is where we are now, and I think the return is comparable to the rest of the market, albeit OMC. And the return per month has been decent, so we'll stay there. Let's look at consumer cyclicals. Again, precipitous drop year, yeah, yeah, not year, but month after month. And I think, again, this is not only a demand thing, but also supply. A lot of these companies have been talking about a problem with getting products in order to get them sold. International paper is the sector MVP, and the return looks really good. I've been monitoring the price over the last month, and it's been decent. We can see the last 2 months, no one no one has really performed well in consumer cyclicals. I think there's a couple standouts here, IPG, but the rest have not done well at all. All right, consumer defensive, again, precipitous drop. So the sector as a whole is not performing very well. And I think that precipitous drop is probably, what the market is doing overall. We are currently in Campbell Soup, and looks like NWL is the sector MVP and also leading in price return. Campbell Soup looks like the worst performer. Yeah, the worst performer in the sector, and so I would definitely take that into consideration before purchasing more shares, just to make sure that we're getting a good deal on a company in the consumer defensive space. And all right, energy. Valero is where we are, sector MVP. Oil gas companies have not done well at all. Again, it's all about demand, and I think the scare around COVID and what's going to happen with that. Also, too, OPEC is putting more oil onto the market. The U.S. Oil suppliers are pumping more oil. I know they had a lot of shutdowns and stuff like that because of COVID, because of storms and stuff like that. But for the most part, I think the oil prices and gas prices have been fairly stable. But Valero's has not done great, but not horrible either. Again, it is the sector MVP. The return is comparable to the rest of the market for the most part. And just looking at some of these individual names here, I think everyone really took a hit this past month. Some faring better than others, of course, but for the most part, everyone is down. All right. Next, we have financial services, and this one is almost always a huge sector for us because of the dividend for the most part. Again, precipitous drop month after month. Currently, IVZ is the sector MVP with a crazy 8% return. We are currently in Regions Financial, which, I would say is comparable to the rest of the market, notwithstanding the crazy IVZ and BX returns there. It looks like almost everyone again took a hit in September and looks like August as well. All right, healthcare has never been a great sector for us, and it's jumped around a little bit, not quite the precipitous drop we've seen in the other sectors. CAH is a sector MVP. We're currently in Merck, which is the worst performer in the sector. There's only 5 companies in this whole thing, so not a lot of not a lot to choose from. But again, we don't have a buy or sell, so kind of stuck where we are for a while. We'll continue making money on those dividends in the short run. All right, industrials, really curious to see where this is at. Again, precipitous drop, so just moving with the rest of the market, it appears. RTX is the sector MVP, and we are currently in, what are we in? Fastenal, that's right, Fastenal, which I'll say is a bit on towards the bottom end of performance for this sector. Again, not a huge sector for us, only about maybe 6 companies I see here, so not a lot of options, but we do have a sell signal on Fastenal, so what I would look at is getting possibly into RTX which is, again, like I said, sector MVP, but also has a really great return. All right, in real estate, uh, okay, I see some improvement. So I'm really curious to see what October will bring. Maybe we'll see an uptick in real estate. MPW is a sector MVP, also our current position. Um, However, the price performance is definitely not the best at all. Um, Looks like SPG and the rest of these guys, yeah, yeah. So it's not the worst, but definitely not the best. And so September 17th is our expiration for that option. So I don't know. I'll revisit possibly looking at another company in the sector. SPG. I've followed for quite some time, so I know a little bit about the company, and we'll just see what happens there. All right. Technology. Hewlett Packard is the sector MVP. It's currently where we are. Precipitous drop again, much like the rest of the market. Not only is it a sector MVP, but I think it's also leading in price performance as well. So that's really good. But as you see, for the last 3 months, it's been a huge drop. And I think that is almost the case for a lot of these companies in the sector. Hewlett Packard more than the rest, though. And again, that has a lot to do with their earnings call this previous quarter, having problems getting computers in and sold. Supposedly, they're trying to fix the situation, and hopefully next quarter will be much better. All right, utilities. Now, utilities, it's a weird thing. We're talking about like electricity and heat. Um, those things don't typically um, move with the market. But in this case, because we have, company closures and big corporations not using corporate space and stuff like that, which means they're not paying utilities, maybe that has an effect on some of these utility companies. But either way, ETR is the sector MVP. Looks like the better performer, though, is CNP. We are currently in Excel Energy. We don't have a sales signal, but we're close enough to that 10% to warrant sale. So I will look at possibly getting out of Excel Energy and getting into one of these other companies, maybe ETR. I don't know. Want to take a quick look at our current portfolio that the program is calling for, just to see what the congruencies are and differences between what we currently own and what the program is calling for. And I'm also kind of curious to see what's in some of those, like for instance, the up portfolio that's performing so well over the last 6 or so months. See, Best Buy, BX, Valero, MPW, Merck, RTX, ETR, SYY, AT&T, Intel, EMN. So a lot of these companies we're currently in already. RTX, we just talked about that one being a possible substitution for Fastenal if we exit out. AT&T, again, not great performance. And then Blackstone, we know all about Blackstone. They have been doing just a wonderful job over the last years. And then Best Buy, like I said, it's that back to 116. So I think we got out at a good time. All right, so let's look at so the portfolio that the program is calling for is NWL. We saw that one. IVZ. We saw that one. CAH. I think we saw that one. Valero we're in. IP we're in. RTX. So yeah, no, we definitely have to get out of Fastenal and into RTX. We cannot get out of our Southern Copper right now, but I think we're good there. And then utilities, ETR. So we'll definitely want to get out of XLMG and into ETR just to better mirror the, the portfolio that the program is calling for. Um, so the only, so yeah, so NWL, IVZ, CAH, and EMN. We just won't be able to get into those, but the rest I think we can manage.